Okay, we're here with Dave. Please introduce yourself. This is a wonderful place for us to be at Lean's Lodge, and I know this is not your first visit, so please let people know who you are and what you do first
Sure.
of all.
My name is Dave Nadig. I'm the Director of Research for ETF Trends and ETF Database, and for the last 25 years I've been building, researching, analyzing, and writing about the ETF market.
That's interesting, because I was wanting to ask you about ETFs. And
Funny how that works.
Yes, it is. It is. To me, one of the real questions is, where do you go now, given all that's been happening in financial markets with the pandemic and everything? Europe, Asia, US, how do you look at these things now, given the pandemic?
Well, what we saw, so my job is largely working with and talking to financial advisors about how they're making allocations for their clients. And what we saw in the pandemic was, frankly, a lot of advisors really sticking to their knitting. So to me, the test case was March, right? Because in March of 2020, what happened? Well, the market came down a lot.
Yes.
And a whole bunch of advisors had quarterly rebalances due on March 31st, right? And those advisors that stuck to it and they rebalanced into those depressed equity markets and sold those excessively priced bonds look like absolute geniuses. So there's this track record now for a lot of ETF-centric advisors of making these rotational calls calmly and carefully. And so what we've seen this year and going into the end of the year is, frankly, what I call the no alternative market. A lot of advisors traditionally have looked to provide income to their clients through bond ladders, through bond funds, and those really, frankly, aren't delivering anymore. So what we're seeing is strong equity allocations and a little bit of a hold your nose and stay invested mentality.
Suppose the Fed starts to signal that maybe they're going to make a move.
Like a maybe taper?
Maybe taper. Exactly right. What happens then in this market?
Well, so, I'm not in the business of thinking out the entire market. I can tell you what I think advisors are going to do.
That's what I'm saying.
Yeah.
Okay.
So in the ETF market, I think what you're going to continue to see is this move into equities as the base case asset class. We've already seen, certainly the taper isn't going to sort of radically make the case for buying bonds a whole lot better, right? We know that. So I think what we see is advisors positioning themselves for the long haul, right? They know that there is this eventual reduction in QE, the eventual raising of rates, that is like water, it is eventually going to flow downhill, and we're seeing people position for that.
Is the market too high right now?
Why do you ask such hard questions? I mean, look, by most traditional measurements of straightforward PE or even CAPE ratios, of course the market looks very expensive right now. But again, it has to be relative to what? And relative to what's available in the risk-free rate, it doesn't seem that expensive to me. Okay, interesting. Well, wonderful insights. We really appreciate it and hope you enjoy the rest of the visit. Great to have you here, buddy. Thanks for having me. Good to see you. Right on.